Hi everyone, it is Monday the 6th of July 2020 and it's heading on 1 p.m. So I'm just going to have a look at the markets and starting off with the US dollar index. Alright, so we really don't have a very clear direction at the moment. Alright, so we broke a recent low on the 23rd, we broke the low of the 16th. Then we subsequently went up and broke the high on the 30th. So basically the market is effectively ranging at this point and it's kind of testing, do I want to go lower? No. Do I want to go higher? Nope. And it's stuck within this range. All right, so currently obviously looking nice and bearish at the moment. And if we look at the weekly, we can see that we've had 4 or 5 weeks where price has been largely in the same place. So although I've said that I think that just kind of with the elections coming up, it's very possible that this would be a good explanation for why the US dollar is ranging. I guess we will just find out in time. So what I'm going to be looking for, again, it actually hasn't changed from last week. I'm looking to see price break outside of this range and successfully break either to the downside. We have 96, which is a key level. We're at 97 now, or to break actually above 98. And so then really is kind of, that would be my expectation that it'll start to actually trend a little bit better. It is still stuck largely within a bigger range, okay, between sort of 94, 94.50 and 100. So overall, what it means is that when I'm looking for currency trends, it just means that I'm going to be, I am just aware that the market isn't offering any great strong trends at the moment, certainly not for swing trading purposes. So then having a look at euro dollar here, I can see it's starting to push higher. It's actually done a slightly higher low. If it breaks this previous high on the 23rd, then we'll have a confirmed uptrend. And then I'll just look for shorter opportunities as we head up towards the next key levels, say 1.14, for example. So it is supporting the idea so far of a stronger US dollar. I'm just noting that weekly price action here, which is largely kind of rejecting that level. So certainly 1.13 offering some good resistance there, but kind of overall looking quite weak, but at the same time, obviously keen to keep trying. But I am going to take note of that level of resistance. It may still be a factor. Then having a look at cable. So cable, again, is also largely range bound. If you look at it here, it's very, very messy. It is in an uptrend. So overall, it's kind of strengthening on the weekly basis, at least producing consistently at least higher lows and higher highs. So that makes it slightly different from euro dollar. So in other words, I would lean towards looking for long opportunities here myself, but we've been in a recent downtrend. We haven't broken that trend yet. So actually, it's just basically, it's effectively still ranging, but also recent 5 or 6 days worth of trading looks like it is looking to head higher. Then when I have a look at the Australian dollar against US dollar, this certainly supports a weaker US dollar. I can just see here it is starting to climb. It looks like it's broken those recent highs, and so this is a favorite for me, but I'm also aware that it's quite close to a big key level. All right, so just aware of that, but certainly that looks bullish. So for me so far, out of those, the Australian dollar, US dollar is my favorite for trading opportunities. Looking at Kiwi dollar, it's also going to be very similar to the Australian dollar, but I am also aware that it's not necessarily as, that it won't necessarily be as bullish at the moment. And so I'll be keeping an eye on key levels here, but once we break through, say 66, then I'll be looking for it to head a little bit higher. So supporting again a weaker US dollar, stronger Kiwi dollar, and then have a look at dollar yen, which I'm kind of forever complaining about or nagging that it isn't really going anywhere. It hasn't done anything yet, so nothing going on with dollar yen. That's a hard pass for trading. And dollar Swissy is just to draw your attention to it. Okay, so if we talk a little bit about the Swissy, historically, certainly at least since I sort of came into trading, which is around about 2007, 2008, generally speaking, it has been strengthening slowly over time. It was actually used to be the Swiss pairs and the yen pairs used to be a fantastic trade. They both had this tendency to strengthen against other currencies. They started to not like that, so they started to push back. So this is for the newer traders. They started to threaten to intervene, and then they would push back as well. We had a big, strong intervention here on Swissy. This was really big. This is actually, if you've only entered trading after this single candlestick has actually changed the forex market indefinitely. They effectively depegged their currency, and it just kind of broke the market for a bit, and certainly that is an explanation for why the Swissy crosses and Swissy pairs are not necessarily, they don't really move that much. And so my point is that they started to intervene here, push here they depegged it. So the point is that the Swiss really don't want, Swiss National Bank, the SNB really don't want their currency to kind of head much lower than this, but that's a longer term view. And what we can see though is that you can see it's still kind of creeping back that way. So it would seem that the natural order of things is certainly for the markets to head in that direction. But I would be extremely cautious, and I would pay attention to any news coming out of the S&B. If they start to complain about this, then I would seriously consider not getting involved at all. But the point of bringing this up was to explain why the tendency of the markets is to creep a little bit lower. And so the Swissy pairs for me tend to have that longer term trend to the downside because of that history of doing it. And certainly from a fundamental aspect, the currency strengthening actually makes a lot of sense. They're probably one of the few countries at the moment that I don't think the Swiss would tell you this, but I think compared to other countries, they're pretty stable. So anyway, that was my explanation on that, and that supports actually a weaker dollar but a stronger Swiss franc. And then if we look at a dollar CAD as well, we've kind of got dollar CAD still trying to decide what it wants to do here. It's hovering around this 1.36 level. The longer term trend makes a lot of sense. If we could break the high of June and start heading back up, then this trend would stay intact. And so I'm going to keep an eye on that. We do have that weekly downtrend. I would prefer to see a weekly uptrend as well in that case, and that would buck the US dollar trend. But so far, because in others the Canadian dollar would potentially be weakening as well. So we'll have a look at that. I'm not including them really in my total analysis because dollar yen does its own thing. Dollar Swissy is kind of doing its own thing as well, and dollar CAD as well doing its own thing. So that's pretty much it for me. I really like the look of the Aussie pair against US dollar, and some of the crosses are also looking quite interesting this week.